So guys, I'm going to kick off. As I said, we're joined this morning by FBAA Awards of Supremacy finalist and also national sponsor Credit Fix Solutions. A very excited morning this morning for Victoria and the beautiful team that's over there as well at Credit Fix Solutions. Victoria will be providing insights into the starting block to building wealth for your clients. It's a comprehensive workshop today on credit reporting, both personal and company credit reports, and what you as brokers need to know regarding the new comprehensive credit reporting scheme in 2021, which is a very complex, very big mouthful of a title to put out there. But today's workshop has been created to provide you with a better understanding of all data included in personal and company credit reports and suggestions for how consumers can protect and fix their credit reports themselves and have access to a PDF guide, which is called the Credit Report Explainer Pack and Checklist, to use within your business plus more. There will be an opportunity to ask questions at the end of today's session, but Vic and I were just talking, and we're also quite happy if you do have questions during the sessions. If you want to pop them down in the Q&A box or into the chat box, we will actually hit those as we go this morning. So it's going to be quite an interactive session that we end up running. We love a challenge on a good webinar. So guys, shortly I'm going to pass you over to Victoria. However, just to let you know, if you do want to use either the chat box or Q&A box, you can. So we are functioning on both of them this morning. Also, please note that the recording of today's session will go up onto the FBAA YouTube channel following, give us about 24 hours to get it done. Mariah's great, but she's not good enough to get it done in an hour for us just yet. We'll also receive the link following up in the email that will have your CPD code in it for today. So Miss Victoria, I will ask you to unmute yourself and join me. This is how we know that these sessions are really happening live. And I'm grateful today also that my cat's not here because normally she joins us on webinars. So Vic, good morning. Congratulations again.
Can I do it again? Can I do it again?
Do it again. It's an exciting one. You know, we wish you all the best for the finals run from here, and
thank you
for our home office that the award turns up in. I'm not sure 100% of how they're going to turn up, but we'll see. We'll see what happens there.
Oh, look, we already feel like winners. You know how long I've been in this game and always been called dodgy and credit repair. And it's like, well, now I'm a licensed credit activity. Thank you very much. And
now you're absolutely legitimate. Look at you go all these years.
Totally legit. Yeah. Yeah, totally adulting these days. It's awesome.
And look, that'll probably open me up to the first thing I'll say, Vic, is that credit reporting for such a long time has had a bad rap. And, you know, beyond belief of consumers and also brokers, or some brokers that are out there, it does seem one of the shady sides of the industry. And at one point, it did look that way because of what people were charging for it. I believe you have a no-win, no-fee service available behind your company at the moment.
Sure do. Always have since I started. So I was a mortgage processor, as you know, and then a broker because we've known each other a long, long time. And then I jumped into credit repair because I'm in Western Sydney and there was all crap loans to write back then, you know, sort of 12, 13 years ago. So I was like, well, everybody needs credit repair. I'll join in on that because then I still get to be with finance brokers who I love because it's a great industry. I don't need to tell anyone here that. But I didn't like the fact that they charged upfront, because I worked out after the first year or two that they were charging money when it was never guaranteed. And I couldn't stand, and I did 3 years, as you know, I did 3 years there, and then I just quit. I was tired, I was over it. But then, yeah, I started Credit Fix Solutions. And so I do the work, I make sure it's work I can do. Nobody wants to do 4 to 8 weeks worth of work and it's a cost and you don't get paid. So just always made sure that, number one, it was a benefit to the client to actually pay for anything to be fixed, and they only pay when we fix it. Some of them still don't pay, but I am not going to change that. I'm not going to change it. Happy to offer that. Yeah,
I think that's absolutely brilliant. So Miss Victoria, I'm going to hand everything over to you. I know you've got a great presentation sitting behind the scenes. As we said to everyone, if you do have any questions, please feel free during the sessions to drop them into the Q&A box or the chat box, and we'll address it as we go. But Vic, it's all over to you.
Thank you, Leah. I'll just share my screen. Morning, everyone. Thank you for joining. So as Leah said, we're going to look at all the major points of credit reports that you need to have your heads wrapped around, especially moving forward into 2022. This is a new system. get on top of it all. I'm sure we can give you a copy of the slides, so that's fine. So you can have that there and really get your head around all areas of credit reporting. So why won't my slides change? Oh, there you go. So just a quick disclaimer, this presentation is for information purposes only. Now, I do have my law firm as well now, Credit Fix Lawyers, for the last couple of years. So we are able to give legal advice through our law firm, but presentation today is for information purposes only. Now, the boring stuff is done. Let's get into the good stuff. So the areas we're going to look at is number one, because look, I know there's some brokers out there, you've been doing this for a while, but it's good to go over the main points. But there's also some new brokers which, who may not have, written loans yet. So we're going to look at all the basic points of credit reports, but wrap it up all together: personal reports, company reports. Then I'm just going to do a quick slide on the 4 credit reporting agencies in Australia. So there's 4 now, which makes my life really interesting, but also how your clients can read, improve, and fix basic stuff on their reports, which is really, really awesome. Just a little case study time, some common questions that come across our desks every day of the week, just to get your education levels up a bit. And then we'll just do a quick recap. And as Leah said, pop your questions in chat, pop your questions in the Q&A, and then Leah's going to jump in and ask questions along the way as well. That's absolutely fine. So comprehensive credit reporting, CCR, what is it? Those of you in the room who have been in finance for a long time know that it used to just be the old CRA report, which pretty much nobody cared about because you fax your deal off to the lender and off you go. Then Vida, changed to Vida. Nothing really changed at that point. Then Dun & Bradstreet created Ilion, and then Equifax bought Vida. And then I won't go into all the legislation that surrounds it because it's not important to you today. What's important to know is simply the fact that credit reports are a lot longer and contain a lot more information. And it's very important before you start spending hours on working on a loan and submitting it to a lender that you very carefully read through and you can understand all the main areas of the reports. And what it was supposed to do is to give future lenders a better idea of where your clients sit, so their financial behavior, things like 24 months repayment history information, types of accounts, limits of accounts, things like that. Because moving forward, and this is happening in the US pretty much all the time now because they've had the same system for a while, and a couple of lenders here are already doing it. They're able to process your loans faster and get your approvals just by checking and running the credit reports. So not having to ask for 6-month statements, obviously bank statements, I'm sure, but not your credit card statements, not your personal loan statements for other debts, which is great because how much paperwork do you currently have to get together? They will simply be able to use credit reporting as their main tool to assess repayment history information. So therefore, and they're already starting to do it, which is great. Obviously, there's some negatives that came with CCR, and we'll go through those. Most of them, don't really affect you because you have your amazing non-bank lenders. So if they've got some negative data on there, of course, you can still get a deal across the line. But at least this way you understand it. And I suppose just be in touch with your BDMs, your lender BDMs. If you can get hold of your credit teams, really learn your products so that from a credit report standpoint where you're going to be placing the deal. So information on credit reports is more comprehensive. It now contains things like our accounts. So you'll see there'll be a section in the report that you need to read through carefully. For example, your client comes on board and they want to refinance, they want to purchase. On the reports, you'll be able to see what sort of credit card accounts they have, what sort of personal loan accounts they have. And I think the great thing about this, if we're going to throw in a positive about comprehensive credit reporting, is that you can see what their credit card limits are. For example, I remember when I was broking, I would ask someone, for the A&L, do you have credit cards? Yeah, I've got a $3,000 credit card. Okay, great. Chuck everything into the servicing calculator. Yeah, you service. Then I go and do an application, and then I'm chasing paperwork. I get the credit card statements in, and it's a $20,000 credit card, but it's just they only owe $3,000. But then you've got to put the 20K in and all of a sudden they don't service. So use the account information on the credit reports just to double check. And just bear in mind, asterisk, because they always apply, not everything is reported. Okay, most lenders and larger lenders and those lenders linked to the larger lenders, they are, but not all. So you still need to ask the question if they're not on the reports. Defaults, core actions, they're the really bad marks. If you haven't come across those yet, that's where you just really haven't paid a debt. Sorry, my phone's ringing, it just distracted me. And they're on our reports for 5 years. Even if your clients then pay them, they're just marked as paid. They can only be removed if you can find legal grounds to remove them, i.e. they were not listed correctly to begin with. The other information you need to keep an eye out for, and we'll have a look at this on a slide in a minute, are the amount of inquiries your clients have and the type of inquiries, but that's on a slide. We'll get to that in a minute. And don't forget your companies. So your clients who have a company will have, for those of you who are new, will have a company credit report, okay? And that also comes with a score, with Equifax anyway, and it also comes with things like petitions, ASIC activity, trade payments, anything adverse on the directors, and obviously your ABN details and things like that. So when you're doing loans for families who have companies, it's very important that you're reading through the company reports as well. And we're going to look at the main areas in a minute for company reports. So credit scoring, we all pretty much know about this. It's been around for a while now, but what's a good credit score? You know, what are you looking at if your customers, and I think a lot of people from our brokers that send clients to us, they can still get them a loan, but they're really rate driven. And I think that's been brought on by the pandemic and a sense of wanting security and wanting to know that they can get, you know, the best interest rates so that they're going to be okay moving forward as rates, you know, eventually go up. So we're seeing that more and more brokers are going, hey, I need this tiny default removed. I need a few inquiries removed because the score's 650 and my clients are jumping up and down and they want 2% with a major bank. And I need it to be 750. So again, keeping in touch with your BDMs, learning your products, I mean, there's some lenders who don't credit score at all, which is fine. But again, it's going to be about your customer, you know, and what they want, you know, bid, all the rest of it, you know, that don't need to get into that. But good score, 700, 750 and up. Anything under, our brokers are telling us that they can't get like the major traditional lenders on board. The other section of this, and this is Equifax, by the way, so Equifax personal report, just an example, it's not real. On the right-hand side of the report, you will see the account repayment history, commercial credit application information, all of the key points, which is a summary that contributes to the score. So the AI is looking at every single section of the report to calculate the score. And with Equifax, they've brought in a new scoring system. It's this new whiz-bang AI, and apparently it's going to personalize it a bit more. So we'll see some changes with that. And there are some other changes with RHI reporting coming in next year. And also consumers will be able to order a free report every 3 months, because at the moment it's only every 12 months, which is a bit annoying. But make sure you're reading the summary, because even if you have a great score, your customer could still have a default, because we're seeing reports with defaults that are like 4 years old and they're paid. So the AI is not really calculating that as a factor anymore towards the score. So you've got a great score of 650, 700, but you've got a default. So again, reading through each section, and that will be in the summary if there's anything there. And you can see here, and that could be something that the credit assessment team don't like. You've got a score of 790, but there's a red X for commercial credit application. What if the credit team at the lender doesn't like that? You know, so making sure you go through all of this properly. And also down the bottom in my awful red circle, because I have no PowerPoint skills whatsoever, but it is an important section. It's still called the Vita Score 1.1. I did mention when I had a chat to someone at Equifax the other week, can you change it to the Equifax Score 1.1, because it's just confusing. But anyway, they'll get around to it. That's the score that Equifax is giving your customer, where they believe the score is going to sit in 12 months. It's really important that you make sure you're looking at this score as well, because your credit teams are looking at this score. Now, if that score, not in this example, it's fine, it's about the same. So you think, yep, okay, we're good with the score. If this was, say, 500 or 400, you might have problems once you send the deal up. to the credit team. Okay, so just making sure, even if it's letter of explanation, or maybe you can see something on there that's happening but is not happening anymore, talking to your credit team, your BDM, so on and so forth. But that is affecting some people from getting, the better interest rates, the more traditional lender loan application approvals. So that's a good score. Yeah.
Just following in on this one, we do have a question from Bipen. He's just wondering, on the previous slide to this one, accounts meaning credit accounts, or are they other bank accounts?
They're credit accounts. Good question. Thank you. So credit cards, mortgages, personal loans, anything consumer, the accounts are listed on there, but they're also phone companies. So Optus is now listing, just to make it even more fun, Optus is now listing an account. They don't do the repayment history information, but we are now seeing Optus. So a phone account is on there as an account on consumers' credit reports. So yeah, no, very good question. So that was a good score. And then we'll just look at what a bad score is. And like I was just saying, make sure you go and look at the summary. The summary will explain to you why this score is where it is. Okay, so you can see there's 3 red boxes. There's a default, there's really terrible inquiry behavior or patterns of applications, and credit limit changes. So if someone goes in and they've got $5,000 credit card, the next month they've got 10, the next month they've got 20, the AI in the back of Equifax is going, oh, hang on a minute, the credit card limits are going up. What's the problem? Good tip though, like here, if you've got a client and you come across their report and they've got, say, 5 credit cards and they've paid them all on time, their score still could be a bit low because they've got 5 active accounts. Don't tell them to cancel all their credit cards, because we had a guy who did that and then his score went down. And when I complained to Equifax, they said, well, because he has no repayment history information, so we've got nothing to score him on. So don't tell your customers to go and close everything down. I would suggest close everything down, but keep a credit card and keep paying it on time every month. And then they'll have great RHI, but the score's going to be up because they can calculate. So that was a tip. I learned that recently with a customer of ours. And company reports have scores. For those of you who haven't seen company reports before or dealt with a family who maybe has a business, they do have credit scores. Again, anything in the green is good, usually 650 and up. Anything below that could be that you need to move towards the non-traditional lenders. Again, it has a summary page. So read through the summary. It tells you what's going on, what's affecting that company's score. They don't have a VITA score 1.1, but they will state on the company report, as you can see here, the chance of adverse in the next 12 months. So this has 13%. Okay, but you could have a company with a good credit score and then they might have 80% chance of adverse. Okay, so getting your head around that and learning all of that is really, really helpful for you. This just all moves you faster to get into your loan options so you can get paid and settle a loan. Okay, so this is all happening at the beginning before you even spend time on lender options. So it's really important that you learn all of this, and feel free to use it for educational tips for your clients. Why not send out a little email? Oh, did you know that too many inquiries could affect your credit score? Please be mindful of your inquiry level, because I know we're doing a refinance in 12 months time. I know some families will come to you and they've already found a house, but then everything's terrible and then it's hard. But you do have some customers who come to you and they may just be at the beginning of their wealth creation journey. This is really valuable information for them, because you can set them on the right track now. And then once they finish saving or doing whatever they're doing and they come back to you, say in 6 months' time, they're going to have great credit reports, which is going to help you. Inquiries, what you need to know. We're seeing, and Leah, I know that we have shared a gripe on this for a long time now. Buy now, pay later inquiries. Now, I had a chat to Equifax the other week and they are changing the algorithms. So that is good news, because at the moment, just one buy now, pay later inquiry is dropping scores by 50 to 100 points. Now, it doesn't sound like much, but if you've got a client sitting at 750 and you think you can get them into the best interest rate in the world, but then they go and buy a barbecue from Bunnings and chuck it on buy now, pay later, their score's going to drop maybe 650. Well, what if that score is then not acceptable for that lender? Do you really want to go and do all your work again? So educating your clients, new clients, existing clients, to only use these facilities. Again, think about doing credit inquiries before they do them. I like to think about it, leave it a day, come back. Do I really want to buy that? I think that's just a great tip. You can remove some of them. That's fine. We've had great success. It's something we jumped into about 2 years ago now. So up until a year and a half, 2 years ago, we were never asked to remove inquiries, but I don't know whether it's, like I just said, consumers just want more security and they're looking for the best deals they can get. But a lot of brokers are sending us reports and they're like, I just need the score to go up a bit. And we're looking at the reports and seeing there's nothing bad on there. There's no defaults, court actions, what we'd usually work on. But guess what? There's 10 buy now, pay later inquiries. Now, we have found ways to remove them, which is awesome. We've been working hard on that for the past year or two. So if you do come across reports and you just need that jump to make your customers super happy, you can have them removed. I'm also going to show you how your customers can go and do that themselves, because it's easy work. So we tell people, look, you can go and do this yourself. We're happy to do it, but if we do, you're going to have to pay us something for our time at the end. But buy now, pay later inquiry, also the amount of inquiries. So your credit teams will probably look at the last 24 months behavior. So I wouldn't worry now about removing inquiries for a consumer anything before 2019. And then next year, I wouldn't look at having to remove anything before 2020, because it's about you putting the loan up and the credit assessment team being happy. And as far as I know, although pop a comment in chat, it's the last 12 to 24 months that they're interested in. So I wouldn't worry too much if it's old inquiries, as long as the last 1 to 2 years, they've got no more than 5 to 10. I think one of the majors is really strict in their 5 in the last 12-month period. But again, that's just you getting across your products with all your different lenders. And we have commercial and consumer inquiries. You may come across very busy, successful people who have 10 companies and they have 100 inquiries and their score's a bit low. That's just going to have to be something that you need to get around with your credit teams. It is frustrating. I've had several successful people call me over the last year going, why am I being punished for owning 10 properties? And I'm like, well, it's just the scoring system. Sorry, I don't work for Equifax. So just being mindful, like, where you're looking to place those deals and talking to your credit teams.
Nick, we've got another question that's just jumped into the box. How will charge cards, also known as credit cards, be displayed on CCR in regards to their repayment history? Does it depend on each financial institution? I'm assuming that all banks are now part of the credit reporting schedules, because I know at one point it was a bit hit and miss as to who was in and who was out.
Yeah, it was hit and miss, and then they mandated it, didn't they? ScoMo mandated it, and then they all had to jump in. By September 2022, all major lenders need to be signed up and reporting 24 months. So there's a few lenders that have just jumped in and they're reporting maybe a few months, but yeah, this time next year, we'll pretty much see all of them on there. I don't know what the T's and C's are on that. I think it's if you're a credit provider or a lender of a certain size and above, you have to be reporting. Yeah.
And also, I think your next slide is about to answer the second part of that question. So
it is. Ta-da!
It off this one.
There you go. So the slide is in the right place and the question is in the right place. How good's that? So this is what, to answer your question, this is what RHI looks like. Kind of, it can be a little bit different, the format, the colors, depending whether you do Equifax, Illion. It just depends. Like a consumer gets a report and instead of zeros, so you see all the zeros along there for 24 months. If you've got zeros, some reports might show a format of green ticks, but that's good. So 0 means 0 months arrears. The format is, as you can see, it's the type of account at the top. So this example is a mortgage. It gives you the account. It also gives you the limit, which is great. And then it tells you, has this person been on time for the last 24 months? So this is the basic format, okay? If you've got numbers in there, and I'm going to show you the code in a minute, that's not good, or R's for not reported, but I'll show you that in a minute. But this is basically the account. And if it was a credit card, it would say credit card up the top, and then it would tell you the limit. Okay, so you have a very quick view of overall, might be a couple of things missing, so still ask them, overall what their limits are on their credit cards, etc. So bad, bad RHI. We see this. This is really sad because we've seen a lot of people, I'm sure you have too, whose credit reports are now affected from, loss of income, loss of work, whatever it might have been during the pandemic. And then you get repayment history information like this. X means 6 months arrears. They haven't paid for 6 months. A 1 is for 1 month's arrears. A 2 is for 2 months arrears. 3, the code's on the next slide, and happy to give you copies of the slides, so don't worry. But ours, I just want to go into that a little bit because it's confusing a lot of people. Ours are for not reported. Now, if a lender starts reporting and they don't have anything reported for that period when they start, or maybe September 2022, they've only started reporting this time, right? They'll have ours between now and a year before now, if that makes sense, because they were not reporting. So that's what it was built for. But then what happened is pandemic hit, lots of people went into financial assistance packages, so they couldn't leave it at zero because it's not zero, it hasn't been paid. So what they started doing was putting an R for not reported. So be very careful when you're reading through repayment history information. If you see a group of R's together, we usually see like 3 months together or 6 months together, that will draw your credit team wherever you place the loan to question why there are R's. Because if it's 0000, so paid, so we know that they've been reporting, and then you've got 3 R's and then 000, credit teams are picking up on that now. And they're saying, well, we know that they were reporting before the R's, and then we know that they're using R's when their customers are going into financial hardship. So what was the deal with the hardship? So if you're seeing them, as long as they're kind of old, I don't think they're really affecting, as long as you've got 6 months good payments after the R's. But you might want to put something in your summary, in your loan application to your lenders. It's always give a lot of information so there's no more backwards and forwards. I see from group chats the amount of time it's taking to get deals approved, so sorry about that, but maybe if you can add in something on your summary about those 3 R's, yeah, my customer explained that we had a drop in business because of lockdown, but since then it's been back on track. Okay, and then the lenders will be able to ask for statements, so that's fine. But just, yeah, be mindful of reading those R's. I've got the code here as well. So 1 is 1 month's arrears, 2 is 2 months arrears. The only one that people get stuck on is P. They think it means paid. It actually means pending. If you see C's, that's for closed, but P means pending. So you might, for example, if you ran a report today, you might see a P for November still because they haven't, linked to Equifax, but it's fine. That's okay because your lenders where you're putting deals up to are seeing the same thing. So do companies have repayment history? Kind of, not the same as our personal reports, but pretty much the same thing when it comes to paying their bills on time, which is really important for you to have your head around and read before you submit any deals up. Because what suppliers are doing is they're reporting, some suppliers, not all, maybe some of the big ones like Caltex, for example, they'll report whether invoices were paid on time by the company. And if you've got a client who's always been 30 days late, their score is going to be terrible. And your credit assessors are going to ask, they're going to be asking questions like, why aren't they paying bills on time? So yeah, they kind of do. Like with this example, this is what it looks like. This is Equifax company. This company has an N8 for not applicable. There's no data trend, but there's also 00 for directors adverse. There's no late payments on any trade payments, which is good. But in this industry, they're saying, which is something credit will look at, most people in this industry are 7 days late. So they'll take that into consideration as well. Again, educating your clients on this, what a great way to educate your business clients and say, hey, your trade payments may be affecting your credit report. I know you're looking to do that business loan in 6 months. Do you just want to check with the bookkeeper that everything's being paid on time? Sometimes it's you miss that it's a 7-day invoice. I get paranoid. I check my invoices 10 times and set, Google Calendar reminders 2 years before. No, I'm kidding, not 2 years. But paying, trade suppliers and things like that, very, very important. And here we go with the 4. We're up to 4 now, Leah, 4 credit reporting agencies. So I think last time I did a prezzo, there was 3, but the newest one is Creditor Watch. It's actually quite useful, although it's causing problems because we're seeing defaults listed on Creditor Watch and not Equifax or Illion, which is kind of a bit annoying. Creditor Watch are new. Now, what the good thing is with Creditor Watch is that your clients, if they have a company, so this is just company reports, if they have a company, they can log in, create a profile and see their report. Doesn't cost them anything. It's really great. Whereas Equifax and Illion are the other 2 CRBs that provide company reports. I think people are ordering their company reports themselves and paying like $300 because there's different levels of company reports. You can get a basic one for like 70, but if you want to see default core action information, so if you want to see everything, and you need to be holistic because that's what the lenders are doing when you submit a loan up to them, that report is like 300, which is crazy. But again, look, talk to Leah, talk to your BDMs. I'm sure there's something that they've got there if you haven't used the platform yet, or your ag group, where you can order reports for your clients. But if you're not doing that, please give your clients the correct websites to go to. Don't just tell them to go and Google their credit report and get their report, because there's a lot of, as you would have seen on TV, across the internet, there's lots of free credit scoring websites. They're not the CRB report. So they're not the reports that your lenders are looking at when you submit a deal to them. Okay. They're checking these reports. The free credit scores are this websites. I mean, there's one which is an offshoot of one of the CRBs, but again, when they send the score to your client, they're also going to say, hey, you've been approved by blah, blah. We can get you a deal. So potentially if you just send them out into the internet, they could be poached by advertising because they're lead selling, right, with our data. So they split into another company, and then through that company, they feed the data and they go, hey, buy our data. It's business. It is what it is. So those are your 4 websites to educate your customers on and get them to obtain their credit reports. We can see different information across reports. Not all the time, it's not common, but I would say 20% of the time. So if you're having your client meeting and they say something along the lines of, I went through a divorce last year, I lost my business last year, my partner left me for my best friend. Yes, I've heard that one before. I would suggest to tell them or encourage them to run all their reports. It could be that they have a default on their Experian report and not Equifax or Illion. It could be that they've got a default on Creditor Watch and not Equifax. Also, personal reports are free. They can get them from Equifax, Illion, and Experian. Experian take 10 days, but the other 2 are pretty quick. Creditor Watch is just companies, and then there's company reports with Equifax and Illion. Experian is just personal. Again, you're going to get this slide, so that's all good. And I just wanted to share with you how you can help your clients to go and read and improve and fix their credit reports themselves. There's some basic stuff that people call us for all the time, and we just tell them to go and do something basic with Equifax. For example, had a lady call me the other week and she's listed as Mr. and she was just peed off about it, to be honest. It didn't really matter in terms of her broker getting her a loan, but I just told her, look, if it's personal information on a credit report, you can just lodge a correction request with the credit reporting agency. It's not what we do here. We're doing very complex work when it comes to defaults, core actions, people who have been through horrendous times, DV victims, but they're back on track now and they don't want to deal with any of it. That's where we come in. If it's simple stuff, your clients can do this themselves. They can also lodge a request in writing. So if it's fraud, your client has fraud, they need to get a stat deck, they need to get a police event number. So go down the local police station, get an event number, and then they need to lodge a request in writing to their credit provider. You can't just do a corrections through Equifax. And anyway, that wouldn't change the Illion and Experian. All right. So it's a credit provider that needs to request the information to be removed from whichever credit reporting agencies they have listed it with. It takes 30 to 45 days. That's how long they have, as per resolution, legislation, AFCA, all the rest of it. It's 30 to 45 days for an internal dispute resolution. You cannot just take them to AFCA or TIO or E1. They will reject the case you have because they get fined. You get fined if you get a complaint through AFCA, which I think we're all AFCA members now, right? So we don't want any complaints. They're expensive. But we all have, 30 to 45 days to resolve a complaint in-house. So they can do that. I would say if it's more complex, defaults, things like that, they need to prove that the default was listed in error as per legislation. So for consumer defaults, that's the credit reporting code. So I've been doing it for years. I've done thousands, so I know it back to front and inside out. I have a copy on my desk, which is kind of nerdy and sad, but that's the field I'm in, so I need to know how to be good at this. But if it's just they haven't paid it, if it's just they've just left a bill, most likely you can't get it removed. Okay, even if they then pay it. And sometimes people have said, well, what if I pay them double? Can they remove it? No, because that's then blackmail and very illegal. And they're very careful with removing data because we need to be able to rely on our credit reports, right? You do, your lenders do, we'll do. So you can only remove things if they're listed in error. And they can try themselves, but you do need to prove the error. So it can be a little bit complex. We go through communication history notes, contract, default warning notices, everything to try and find an error. So, and it can take about 4 to 8 weeks. So case studies, these are just some common questions that we get asked all the time. So I thought this is great for your education in case you're sort of wondering about these things because they're very, very popular questions. We've just looked at repayment history information. Can it be changed? If you've got 3 R's or if you've got a 1, 2, 3 in 2021 and you're like, crap, that's the only thing stopping this beautiful family from getting an amazing loan or better interest rates. Yes, you can amend RHI. We've been trying for about 18 months. So straight from the horse's mouth, been doing it myself. But only if they were in a formal assistance package with the credit provider for those months. And basically their systems have just stuffed up and they've reported the arrears. I don't know, maybe they didn't press a button to stop the reporting. But yes, you can. It is taking about 6 to 10 weeks to get a case manager involved because so many people have complaints about RHI. So it's taking long. I can remove a default in 4 weeks. Repayment history information, which I hardly make any money on, is taking like 2 months. 2 months to fix. So if your clients have found a property, if they need to move forward really quickly with a business purchase, a lot of more business finance going on out there at the moment, you may just need to look at your alternative lenders, non-traditional, non-bank, whatever we're calling them these days. They're fantastic and they're there for reasons like this, self-employed, bit of negative data, difficult deal outside the square. But look, we've got PD days coming up and we're all nearly back in person. So make sure you just come along to those and just, learn from all your BDMs. Is it easy to remove a small electricity default? No, it's not. Just because it's a $300 default doesn't mean I can just wave a magic wand and get it removed. Doesn't work like that. But again, on the flip side, any utility telco default, as long as it's not a particular construction loan or above 90%, whatever it is, an LMI gets involved, any default under $500 paid, utility or telco, as long as it's marked as paid, you're usually fine with most lenders, all right? But go and check about that. We have had to remove some though because of the type of loan, because if it's there, the client is going to pay double the interest rate if it's construction, first home, for example. It's not any easier to remove I wish it was. It's not any easier to remove a $300 default than a $3,000 default. And that's because you still always have to prove that the default was listed in error. All right, so going back and doing a full investigation, it's the same amount of work. All right, and you'll find a lot of clients come to you, especially your cohort of newbies, young people, whatever you call them, that cohort, they've been studying, they've been sharing flats, they've been sharing homes. Often they've just left a final bill and moved on, probably moved in, with girlfriend, boyfriend. Those can't be removed because there are no legal grounds. Okay. So no, they're not easier. And if a debt is unpaid, we can still remove the default because, and we get this asked this all the time. So I thought I'd just throw it out there again. I know some of you may have heard this from me before, but I'm still being asked this question a lot. If it's unpaid, we're not arguing that they owe the money. So the debt and the default are separate matters. We're arguing that the default was listed in error. It doesn't mean that our client gets away with paying the debt. They still have to do a payment arrangement, or they may have to settle. Okay. Even it depends, it's case by case, but it's not about getting them out of the debt. All right. It's about removing the default, but the debt is still there. They still need to make sure that they pay it. And a complex scenario study, I wanted to share a story with you quickly because this is something that's coming up more and more. We're all across it. So if we get a client with an Equifax report and we're fixing something, the team is making sure we're chasing them for their other 2 reports. So say, for example, we've got a client who's got a default on the Equifax report, consumer default. We will give them the websites to go and get their Illion and Experian. Now, the reason we're doing that, and so I'll share this story with you. We had a lady who came to us through her broker with a Equifax report, and all she had was just a ton load of inquiries in the last 2 years. I think it was like 40 or 50 inquiries. She had a great deposit. She wanted a particular lender. That lender wouldn't be happy with a number of inquiries. So broker's like, can you help? Yes, we can. So we took her on, started work. Then she gets all the requests for the other reports. So she orders them. 2 days later, we get her Illion report. Lo and behold, there's a default on there. Now, we asked her some questions about the default. Seemed like that we had grounds to remove it. Okay, because of the assessments that we do, we're very careful. So we said, okay, that's fine. We'll still work on the inquiries, but we'll help you remove this default as well. That was all good. And then a few days later, because Experian takes 10 days to get reports out, she sent the Experian report, and there was a Part 9 debt agreement on there. So it wasn't showing on Equifax or Illion. It was on the Experian report. Now, at that point, we just put the brakes on, stop work, because as you know, if there's a Part 9 on a credit report, it doesn't matter whether there's 60 inquiries and a default, you're still going to have to go to the same non-bank lenders. So we just stop work because we don't want to do work, because if we get something successful, she's going to pay. And then so it was just stop work, no charge to you, back to your broker, you've got a Part 9. But just to really make it clear how important it is to be across all of this information and read your credit reports properly.
Vix, we've got some questions that are coming in based on the slides that you've got at the moment.
Okay.
Guys, these are some fantastic questions going on as well. A couple of you I have replied to directly. And that's for the main purposes of you do need to get in contact with a BDM from Credit Fix Solutions to discuss matters further. But I think the first one I want to sort of address at the moment, I've got credit inquiries for personal loans, credit cards versus mortgage loans. How do those inquiries affect someone's credit score? So are they all weighted differently, or do they have the same amount of points that come off?
Yeah, no, it's a good question. Yeah, they're weighted differently because you've got, if you think about it from the way I do, which is you've got good debt and bad debt. So a mortgage is good debt, right? Because you're buying something. Car loan, pretty cool because you're buying a car. But credit cards, buy now, pay later, not so good because it indicates maybe a slightly different or not as good finance pattern, I suppose, or behavior. So yeah, they are weighted differently. Like I did my, I've been renting my whole life. I just bought my first home last year, and we did one inquiry. The broker did one because we knew which lender we were going to, and my score dropped by 20 points. So it wasn't really much. But then we're helping people remove, like I was sharing before that story for that lady, one buy now, pay later was like 100 points. So yeah, weighted differently.
Just another quick question. Okay, so can Credit Fix Solutions also negotiate? So when you're removing an inquiry or a default per se, can Credit Fix Solutions also negotiate with the lender to reduce the principal of the loan and the interest rate?
Yeah, we can. That's fine. I mean, look, we charge an extra fee for debt settlement. Otherwise, we can get the default removed and the client can go and do the settlements themselves.
And if they're not willing to settle though, and they want to have a look at having the interest rate and possibly let's say re-amortize the loan. That takes us back quite a few years using terminology like that. But if we want to have a look at the interest rate being removed, or not interest rate being removed, we all want an interest-free loan. The interest rate being reduced, is that something that you can step in and help with through that process as well?
Do you mean the interest being accrued? So it's a debt. I'm saying it's not an active loan.
We're talking about an active loan. So if we get a default removed on an active loan.
Look, if it's active, then usually we get them to freeze the interest and go into a payment plan. It honestly, it just depends. It's case by case. It depends where they're at. Like, we get some great people who are already paying them off. They've just got the default there. Do you know what I mean? And then, the lenders they can see, she's been paying $50 a week. We'll just leave it at that. I just kind of double check that the interest has been frozen, so they're paying off the principal. But most people who come to us have already paid their debts. We don't get into debt negotiation. It's very rare, like mostly because we're dealing with brokers, as those of you who know us out there. Your customers are coming to you and they're back on track now. They've mainly paid everything off. But we'll help if we need to. That's fine.
Perfect. Also, we have an anonymous attendee, although none of my attendees are anonymous today, but when they put questions in, they're an anonymous attendee. They'd like to know where a director has a company that was in administration, or was or is currently in administration or liquidation. How long does it stay on a credit file for? Is this something that is now forever, or is it 5 to 7 years like other issues?
I've seen some differences, to be honest, and it's a very good question because I know inquiries go back 5 years. I know defaults are listed for 5 years unless it's a clear out, and then it's 7, but they're very rare these days. Court actions for 5 years, but if you don't pay them, the plaintiff can then go and lodge another statement of claim and list it against you for another 5 years. But the ASIC, I seem to think it's about 5 to 7 years. It goes back. It's not forever. I keep on looking at my report, and my ASIC activity is going back 5 years. If that answers it, it should be 5 to 7. But yeah, on my Equifax report, it's 5 years for ASIC activity.
And a question from David Watt, who is one of our brilliant brokers out there. He'd like to know if you have a checklist or a pack that's available for brokers that they can refer to and or give to their clients.
Oh, yeah, actually, I forgot about that. I put all of this. So I thought, okay, from a broker's standpoint, I mean, if this is taking me all day to speak to 5 people and educate them, how are my brokers feeling? And it must be, okay, I'm feeling really stressed out. And why am I doing all of this before I can even look at a lender option, right? So I did a whole credit report explainer pack. It's a really short PDF. You can, actually, if I jump here, if you send an email to sales, right, which is all of us, we're all in there, me and Amelia and Mariana and everyone, we'll send you a copy of the client credit report explainer pack, right? So you could, I don't care, you can chuck your brand on it as well. Give this to people and then they can go and educate themselves. Saves you 2 hours. They know where to get their reports because it shows them where to get their reports. It shows them how to fix things themselves. It gives them a little checklist, like get my reports, speak to my broker about my reports, go through everything, go back to my broker. So you're giving them a whole system that they can follow and then come back to you and then you can get paid.
Perfect. And just on that, I've got a couple more questions going on at the moment. Sudhakar has sent an email to you on how would he find out who his BDM is within Credit Fix Solutions?
Send an email to the sales team. Oh, back. Oh, it was like blackout moment. Did I lose internet? Yeah, just email us here. There's 4 of us here in the Sydney office because I've got the consultants here with me because I need to keep it because I've got my credit license, right? So I manage and look after all the scenarios. So we're all here together in the Sydney office. But send a quick email. I'll introduce you. So you've got Mary down in Victoria, Charmaine over in WA, Kerry up in Queensland, and now we've got Mariana in New South Wales, but Amelia is going to be our second BDM next year.
Oh, it's very exciting. Very exciting. The team's growing down there. So very, very excited.
Yeah.
Another quick question for you, and I'm going to say...
I'll do this again.
I'm going to say this is from my cousin, Scott Talon, who's put it into the actual group. Hi, Victoria. I've got a client who's come to us who's ex-bankrupt. He advised them that he was discharged 18 months ago. He sent the Equifax report over to them, but there's nothing showing on the Equifax report to say that he discharged 18 months ago. How does he find out the date that they were actually discharged?
You have to get hold of AFSA, I think. Isn't it AFSA? We don't do anything to do with bankruptcies, but I believe it's AFSA. If you go online, Google them. We can do it now. Should we do it now, or should we leave him to it?
we'll get Scott to get in contact with you for that one, because like all good cousins, he likes to get me to do most of the work for him. But today he's going to do most of the work.
I've got a friend like that.
Yeah. It's what family are for.
There's always one.
Look, there always is, and I had to be the one to talk him into becoming a broker as well, which again,
that's right. I remember when I met him.
It was. Also, just aside from that one at the moment, how about an unpaid debt 5 years before an unpaid debt is deleted from a credit report, but still a debt collector is leaving a footprint every month on the credit report? Is it possible to remove it and stop?
I love that question. I love that question, because if you're talking about hard inquiries, they don't do that. What they do is they're accessing to try and find someone, right? And that's on the access page, which should be the last page. I think that's what you're talking about, but pop, if it's something else, back into the chat. The accesses page. So whoever's looking for us will access our report, but it's not a hard inquiry. Now, we see the access page. So if I order my report, I'll see my access page. So I'll see that, Credit Corp looked at me last month because they're chasing me for a debt. Okay, if that makes sense. But when a lender does a report, they don't get the access page. So you don't need to worry about it from a lender perspective. Don't submit the client's report up to the lender. Let the lender do their own report. But I would suggest to encourage your client to get in touch with the debt collector and pay the debts, because what they're doing now is, no, they won't list the default again, but they'll chuck it to their solicitors and he'll get a default judgment, court action. And a couple of the big debt collectors are refusing to help us remove the court actions. So it could have a very serious effect on him moving forward. So please just, make sure you get in touch with him and tell him to get in touch and organize a payment plan and get the interest frozen.
Perfect. And I'm going to let you go back to the rest of your slides now, because we are running close to time. So I'll let you.
Look, we're on the last one anyway. It was just a update. I think that's where I was, wasn't it? Yep. Case studies. Yeah, we did all of those. Did the complex. So just headlines, just takeaways from today. Free credit scoring websites are not a true credit report. You've got the slides. If you email us, we'll send you that explainer pack, which gives all the correct email addresses for your customers. Vita is now Equifax. Dun & Bradstreet is now Alien. And we do now have Creditor Watch, headache, but we do now have Creditor Watch, and they can be different. So you can let lenders report wherever they want to report, and lenders check wherever they want to check. I cannot go and find out where 50 lenders check and report and all the rest of it. So it's best just to, if there has been a bit of an issue, suggest to your clients to go and get all of their credit reports. Too many inquiries can affect scores. Some of them can be removed. Watch out for RHI. Make sure you're reading through the report slowly. I always say to my consultants, you can miss something pretty easy on a report. They can be 7 or 8 pages. Just take your time and read through them. And here you go, Leah. Here's our gripe as usual. Final point. Stay away from buy now, pay later. No, I'm kidding. It's great. It's great. No, look, can I just share? I'll just share with you, Leah. I had a chat to Equifax about this the other week. It was a group chat because it was about something else, but I decided to pick his brain. And I did say to him, I said, one of my major gripes is that consumers are being penalized so much by buy now, pay later inquiries. And he said, yeah, we're changing that. So the good news is they are changing the algorithms, because, if I use buy now, pay later to pay for my kids' braces over 3 months, surely I'm just smarter than the other person who gets a $5,000 credit card and pays interest. So why should I be penalized? You shouldn't. So they are, but they are in the process of changing it. So it will be really good next year, because the world's changed. People are using buy now, pay later instead of credit cards. It's a smarter way to do things, unless you're not smart with it. So you shouldn't be penalized. So they're now personalizing the AI. It's called the Equifax One score, which is called Neuro Decision TM Tech, or NDT for short, which is personalized scoring in a nutshell. So yeah, hopefully next year we don't have to complain about buy now, pay later, Leah.
No, look, I'm in the same boat, and it's something that obviously we've got takeaways from today's session on, where I think it's really important coming into the Christmas break as well, that brokers do reach out to their clients and say, don't get excited by the Christmas sales and the Boxing Day sales when it comes to Afterpay, Zip Pay, and all the other pays. There was an interesting one that popped up on my PayPal during the week, that PayPal has now stepped into the for repayments interest-free. I'm unknown yet as to whether or not that will hit a credit file, or whether PayPal has taken the onus of the risk. We shall see, obviously, over in time. But I think, Vic, from your standpoint at the moment, there's a question that came up during the sessions. Would you recommend, because we can't give advice, but would you recommend that consumers do get a copy of their free credit report and also credit score at least once a year, just so they can see how they're tracking?
Yeah, look, I would. I mean, I'm not, it's not an advert. I don't get anything from Equifax, but at least get the free one once every 12 months. Next year, you're going to be able to get a free one every 3 months. So it's going to get better. At the moment, they stop you in your tracks on Equifax. So you get one, you have to create an account now. You used to be able to order your report every day. You just needed to glitch the system and tick, no, I haven't ordered my report. They changed it. You have to set up an account. That was a pain. Anyway, but
You always take the fun out of everything.
I know. It was so much fun.
Organizations, I tell you.
Yeah.
So another question that comes to mind at the moment, it's something that's come up while we've been on tour this year as well. Do you know what the window is for a late repayment? So some people have said it's 31 days, because 30 days is obviously the repayment window before we deem it being overdue. So is it on the 31st day? Is it on the day after it's due? Is it on the 7th day?
Nope.
Do we know what the window of a late payment is?
Yes, we do. And if you look at the slide here, you'll see you've got a 15-day grace period from when, great question, by the way, because everyone gets confused with this. So I owe my credit card payment today. I now have 15 days to contact them and pay it before it's reported.
And if somebody puts let's say a cross against my name to say that it hasn't been paid in that 15-day window, or they've put it on the day after it was due, is that something that you can assist with potentially getting updated to the right one, or is that something a consumer can step in and say?
We can. Yeah, it's something, I mean, all your client has to do is lodge a request to the credit provider to investigate the RHI and amend it. So it's an email to their complaints team. They attach the credit report and ask them to investigate it. They'll get back to you in 45 days. I mean, I'm telling people this all the time, because I'm like, why would you come to us? Like we only charge at the end and $220 per month. So I'm really making nothing out of it, because it's 8 weeks of admin and chasing. But we kind of do it as a side thing to help brokers, you know, if there's a couple of payments plus a default. That's our realm. But if your clients just have 3 missed payments, we just tell them, you just lodge an email. You just find their customer complaints email address on their website.
Yep.
Yeah, and send them an email, subject line complaint, change my repayment history information, and then they'll look into it. Because by law, they have to run the IDR, internal dispute resolution, within 30 to 45 days, which is kind of shortening now. So as per AFCA, if it's a simple IDR, they need to wrap it up in 30 days. You can't just take it to AFCA or TIO though. Like, and it's really not fair on the credit providers, because they can be charged like 10 grand for a complaint.
Wow.
Yeah.
Well, which is true, because we have seen some complaints go through AVCA now on their first instance, and I think it's over $2,000 for the first complaint, which you just don't want that to happen if it can be avoided. The other question, or the other point that I've got as well to raise to the brokers on today's call, and I do know that we are now heading to being over time, is just remember, if your clients are talking about moving during this holiday break as well, and it's the thing that Victoria and I probably crossed over the last 16 years of knowing each other. It's panic season. People will move and they will forget to tell certain financial lenders that they've moved. I'm not going to say that I was one of them a few years back when we closed one post office box and moved to another one, and I forgot all of the bills that were going to an old post office box until about halfway through last year.
And I'm not going to say that I didn't have a default from my divorce 13 years ago. I've always had great credit.
We're not going to say that we've done these things and we work in finance. But it is so critical just to reach out to your clients, even if it's a friendly email before the Christmas break, to say, hey, these are the things we want you just to keep in mind before Christmas. Victoria, I'm even going to cheekily say that pack that we were speaking about earlier, the client explainer handout, I might even grab a copy, and what we'll do is pop that up into the FBAA members area.
Oh, perfect.
And then all the FBAA members that are on today's call will be able to access it through the members area. And for any further inquiries on that, you'll be able to bounce it back to Victoria and the brilliant team over at Credit Fix Solutions. But Vic, is there anything you want to add into wrapping up to today's session?
No, just thank you for being here. Thank you for having me. There will be some more changes next year, but happy to come back and do another session when they.
I think we definitely will be doing another session. I
come
think
along in June.
Several sessions next year. Because credit reporting is something that, look, it is forever changing. As much as the finance world changes as well, it's something that I think we need to really stay on top of, and to get a better understanding for our clients as to what's happening out there as well. Vic, more than anything, I want to thank you for your time this morning, because I know we're on a bit of a time variance between here and New South Wales.
Look, it's happening. I don't care.
It's the finalist time, so we're all very excited for you heading into hopefully the winners round. And you know,
it doesn't matter. I already feel like we're winners. To get recognition,
you're a winner in my eyes, Vic, because you're friends with me.
We're winning.
So guys, that does bring us to a wrap up for today's session, and we're glad we could bring it to you live. There is nothing better than having some live sessions that are out there. As I said, we will bring Victoria back to have a few more chats with us, and hopefully we'll have a Credit Fix Solutions webinar available for you over the Christmas break as well. We are going to launch an education series, so you can log in at any point over the holiday season and update your training and your knowledge as to the products and services that are out there in today's environment. For those of you that are logged into today's call that are from New South Wales, we do have our Sydney Summit coming. It is safe. We are COVID safe people. I am coming down. I am double vaccinated. Guys, it is on the 7th of December. We do need you to get registered as soon as possible for that. So please jump onto the FBAA's website, register your little selves to come down there. We're so excited that we get to be back face to face with people in a learning environment. I know I'm excited to finally be able to get down to New South Wales. It's been since February. So it's been a long anticipated wait.
I'm kind of like tearing up because I haven't been out the house for so long. I can't believe I'm like going to get to see everyone.
Yeah,
anyway,
and it's the same for me, is that, you know, I just want to, I'm not a hugger, but I'm looking forward to coming home and hugging a lot of people, because it has been such a long break. Guys, I just want to say thank you, Victoria. I know that everybody, just based on the questions in the chat that are going on over in the chat box, we've taken so much out of today's session. It has been incredibly educational. My pleasure. As I said earlier, guys, we will be popping this up on the FBAA's YouTube channel for access very shortly. Mariah is a miracle worker behind the scenes. It's not going to happen within the next hour, but give us at least 48 hours and we will have it up and operational on our YouTube channel. We'll also be sending through an email with Victoria's contact details, which will also have the sales team details on it, as she explained earlier. And if you need any information from us, please feel free to email myself directly or Mariah. I'm happy to help out where I can. Your CPD code will come through on an email shortly following this event. The last thing behind me, which if I move this way, you'll see that the national conference is there as well. It's all going down on the 11th of March. We are very excited to be back conferencing as well. It is on the Gold Coast, guys, so please do get registered as soon as possible. It's going to be great. We're going to have everybody up on the Gold Coast enjoying the tail end of what is our summer. It is free for members to attend the conference, so we hope to see your smiling faces there. Again, guys, I'm Leah Renwick. I am the East Coast Manager for the FBAA. It's been my pleasure to host you this morning, Victoria. It has been fantastic seeing you, and I hope to see everybody again soon. Thanks, guys.